This is eSec Money and Insights. Let's get over to our episode. Hi, guys.
Hi, Brooke.
What's going
Mike,
on?
I heard Mike use a phrase. Let's start with Mike.
It was probably made up.
No, it was probably stolen. That's what I was thinking because I liked it quite a bit. You described the Fed meeting decision as hawkishly
Hawkish hold.
hawkish hold.
That's an industry term.
I guess so.
I didn't steal it and I didn't come up with it. I used it.
Okay.
Yeah.
All right.
Hawkish hold or hawkish pause. I use hawkish hold because I like alliteration, you know?
Perfect. I liked it too. You want to start there with the meeting yesterday and what you think
Hold
that
on.
means?
Do you guys know that one of my many nicknames growing up was
Yeah.
Hawk?
I sent you a note today that said "Yo Hawk" was how I
Okay.
started it off. I
All
like
right.
it. It took me 10 minutes to remember that. I couldn't remember your maiden name. And so trying to think of what's her nickname. Let me just ask her. I was like, no, I feel stupid. I know her nickname. The Hawk.
Okay. I'm glad that's what made you feel stupid today.
Did you watch The Hawk, Brooke?
I'm glad that's the only thing that makes you feel stupid, Jim. Good to live in your head.
Yeah.
Did you watch The Hawk, Brooke? It's a new television show.
No, like current? No,
Yeah.
This is another segment of like Brooke is not actually up with current culture moment.
Your son will watch it. It's
Oh,
golf
is
show.
that the one with Will Ferrell and the
Yeah.
golf? And okay.
Yeah.
I've heard it's not good, and I've heard it's not appropriate for kids. Am I right on either of those?
It's Will Ferrell humor, so his humor never crosses that much of a line, right? I mean, it's probably
Okay.
it's
Can
I'd
be
say
R-rated at times, but it's generally PG.
Okay.
It's worth watch.
All right. You guys
Mindless
differ
funny.
from other reviewers that I know. So
Yeah, I mean, you have to go in with like, don't expect some serious plot and a lot of
yeah.
well put together like structure, but it's just a mindless television show.
Did
You'll
you
never
guys
say
watch?
that. Yeah, I watched Stick.
Yeah,
I thought that was good.
I thought that was very good. It's kind of similar to that. And Luke Wilson's in this one. I know that was Owen Wilson the last, but
Yeah, Stick was less silly than this one.
yeah.
So
Well, yeah. Golf is going strong in my life at the moment.
I'm happy
So-
for him.
Someone's got to be strong.
Golf wise,
Yeah, golf wise, it has to go strong for someone.
Let it be the 12-year-old.
Yeah.
Good for him.
Totally. All right. Hawkish hold. Let's get
Hawkish
back
hold.
there.
So let's talk that through, Brooksy.
Yeah, we can talk about a hawkish hold. So I think yesterday, the actual decision was anticlimactic, right? Like people were expecting swaps for pricing in a hold, and that's what you got. I think the hawkish hold part of it is when you look under the hood a little bit. So there was three dissenters, and I think that was a little bit of a surprise. I think probably most market participants would have expected maybe one or two. So I think we're already kind of moving on the internal differences between committee members. When looking at the presser, market participants already feel that Warsh hasn't addressed the inflation fight enough or what he's going to do to get it back within the target range. There's variance on what his preferred inflation gauge is. Is it CPI? Is it PC? Is it something else? So him not addressing some of that yesterday, I think has made some of the markets think that the committee itself, some of the other members, might take the inflation fight into their own hands, which would be voting more hawkish and voting for tightenings at the ensuing meetings. You already saw some big research houses move up their rate forecasts up a couple months from either 2027 or late in 2026. But from our seat and looking at what OIS markets are doing, I think the next three meetings are very much in play. We do get more Fed talk, more Fed rhetoric at Jackson Hole Symposium in a couple of weeks. So I think that's going to get a lot of people's attention. There's a lot of talk around right now about the credibility of Warsh in his first two FOMC meetings. I think there's going to be a lot of eyes and ears on Fed speak. I think even more so over the next couple of weeks to months here. I mean, that does for our markets, it creates some uncertainty because if you're looking at the curve, you saw short-term OIS markets tighten a little bit, or I guess, tighten not from a hike perspective, but more of a lower OIS spreads after the meeting yesterday. But if you look at the long end of the curve, the 30 years flirting with multi-year highs, and there's some debate around was the treasury market itself acting as a tightening without actually having to tighten rates, tightening financial conditions in general. That's what I think Warsh is pushing back on, part of the reason why he didn't increase rates at this meeting and hasn't really given a ton of color around his inflation gauge. I think by the end of the day, meeting was anticlimactic from what happened is what people expected from an actual decision perspective, but a lot of gray area, a lot of uncertainty on the fall now that's going to impact our markets over the next weeks to months here.
throw your investment hat on. What's out there for short-term paper for a reinvest portfolio? What are people looking at? What's the strategy for the rest of the year, anticipating a
Yeah,
couple of hikes?
I think leading up to this meeting, you saw a ton of demand in the short part of the curve. Say 3 months, and people really weren't going to play the break even game on what they should be getting paid over each statement date. For that reason, you saw money fund cash still remains north of 8 trillion, and that's a massive number. So there's still a lot of cash to spend. For that reason, you saw a lot of cash pile into some of this short dated paper, which in theory made it more expensive and kind of took some of the yield out of it. For those that were willing to add some duration to their portfolio and maybe take a directional view on some of the meetings coming up, the supply was definitely a little spotty. We did see some fixed 6 month clear. If you wanted to take 12-month duration risk, you can probably get something in the 440 to 445 range. Some people might take that outright or raise some cash against it and try to come up with a spread through the middle or mismatch tenors there. I think that's few and far between. I still think the structure of preference for the time being is still probably going to be SOFR spread to various ABCP, CP, CDs, and investment product. I still think investors who are able to participate in secured funding and finance non-trad repo assets that's probably where people are going to lie for the time being as well. Obviously, just less interest rate sensitivity around there. You don't have to be as in tune to what your view is on Fed politics and things like that. And you can differentiate that a little bit.
McNeil, I don't think we've seen you since June on the pod. I think the last time it was just Mike, Jim, and I, and we had one with Ches Dog. I don't think we've seen you since the days of SpaceX just getting off the ground and everything that happened in June. Let's start with SpaceX. Like, has there been a pretty big uplift in short interest on that name and what's happening there? And maybe back up to other things that matter in US equity land.
Yep, cool. Good place to start. SpaceX, here's the headline. We're seeing prints in the negative rebates now. It's been a slow grind to get there. We see flow going through at -2 today. That data point could be outdated immediately, but it's nice to see it break through the zero rebate. Last time we talked, I said, like, hey, there's going to be a lot of institutional buying, which is rare for an IPO, but it fits a company of this size. We've gone through the different waves of that, ultimately being added to the NASDAQ 100. So those events are behind us. The cash performance and the stock performance is pretty widely known. The stock has come well off its highs that were north of $200 at one point. The next big event that everyone's paying attention to is Q2 earnings, which are August 2nd, next week, as of recording here on July 30th. And the first lockup is 2 days after those earnings, so August 4th. About 7% of the free float will come to market. You have to ask yourself how many of those people are going to want to be sellers. Either way, it's a liquidity event, regardless of your opinion on that. And, with the liquidity event will come some selling and potentially more supply coming to the market. That being said, it is 95% utilized right now. So despite being widely held, both retail and institutional, main index equity, all the supply is getting borrowed. It'll be really interesting to see how it trades from the August 4th lockup through the 90-day lockup in mid-September, because this isn't just a 180-day lockup, obviously, because we're already talking about one coming just next week. There's a tiered lockup, and then following that 90-day lockup expiry, the supply-demand paradigm might be structurally shifting, where it could be harder to see a trade special. That's not to say it won't. Maybe it will. But we could see the securities lending opportunity peak starting next week through mid-September. But it's been a great trade, broad participation, whether you're a main index equity tracker or you're a retail mutual fund. Fully paid is definitely in this trade. So very broad participation. It's definitely been one of the better earners for the past month or so.
Measuring the market value, it's the largest short in our market, right?
Yep.
I would say globally. I haven't double checked that, but I want to say it was like 28 billion of shorts reported by one of the vendors.
Yep, that's right.
Quite large. How much do you think that short base, and I know you're just guessing here, Mark, but it's interesting. How much is directional shorts versus perhaps insiders boxing themselves and these structures that would lock in on a price? I would imagine as it rallied to 200 plus, there were a bunch of those trades put on and they stand to kind of roll off. And so that's the genesis of the question. Like, how much do you think is directional shorts and how much is going to roll off as we click through these various lockup
Yep.
expiries?
Yeah, it's a good question. There was a good article on the terminal yesterday about some of those structures that are protecting investors to the downside. I don't know, Jim.
I
Yeah,
also think that's the first time you've ever given that answer on the podcast.
Yeah.
that he doesn't know.
Yeah.
When you get asked every day or every morning for supply, do people ask for specific size, or they just say, give me supply and lift you out of everything you have? Or were there big block requests a few weeks back as people put these trades on? Because if you're seeing kind of, hey, I need 300 of this today, I need 600 of this, that's probably shorts, right? Or I guess it could be lost supply to existing structures. I don't know.
It's part of the hard to borrow run, so demand's outstripping supply right now. Anytime there's a rally in price, we do see borrows on the back of it. Hard to tell if that's someone coming in for a couple days or if it's a structural long short. You have the whole other part of the trade that's different structures and things with kind of fixed tenors that are protecting investors to the downside. I don't know how much of the pie to allocate to those two different trades, but it's a lot of both. I can say that with
Yeah.
good certainty. Because to your point, like just the size of the trade, even if one of them is only 25%, the other one's 75, like on a nominal basis, and the amount of supply it's taken, like it
Still a
tells
big
us there's a
trade.
ton of demand for both of them.
Yeah. Well, I guess by next month when we do a podcast, we'll know. We can kind of dissect
Yep.
the August 6th event. What else is happening?
Birkenstock's been a great trade for the past month. That's a main index equity that we've seen good traction with.
I've been wanting to ask this for a while now because you have talked about it more than once. Why is Birkenstocks like what's going on with their company?
Short.
The shoes are just stupid.
But they've also had a resurgence in popularity. So I'm just kind of, is it because maybe of that? And then there was a lot of interest that moved in and they're realizing it's not sustainable. What's the common thought on it or no?
Back to some of the culture comments and us being out of the loop, this one probably falls into that. You do see enough of them on the street now.
Do you have a pair, Mark?
No, I'd probably align with you on that one as far as my opinion goes. So,
Yeah.
but you do see them. People are
Yeah, I
wearing
know.
them.
I
Yeah, so Brooke, there's a big pop in share price late in Q2.
Okay.
There's just some borrower demand in the back of it. It's been a volatile stock, high beta stock. Borrowers have been willing to pay elevated fees to stay in the trade. Infosys has been a good one too, where it's an ADR, but it is a large cap company where there's been pretty persistent borrower demand now, and fees obviously have been volatile, but have remained elevated for a while. And then Medtronic, we should get something on that in August. Throw a dart at the board here. Let's call it a close for the first half of October.
Quick reminder on what that trade is.
MiniMed is a company that IPO'd in Q1. Medtronic still holds the majority of it, and there's gonna likely be an announcement of a tax-free spinoff at a discount of 6 or 7%. So this will look like other trades in the past couple of years where we've had larger company, spin off a smaller company after the smaller company already IPO'd. Medtronic's S&P 500, so it's not the scale of the J&J trade, but it's the same type of thing. 6 or 7% discount on a stock kind of points to being a good trade for our market.
Sure. Yeah.
So, Mark, on one of the recent podcasts, I asked Mike Brooks to give me a view on what would have been a trade that would have been a common theme in the last quarter. And it doesn't need to be that precise, but outside of single stock or deal name securities, what are more thematic trading opportunity discussions that you've been having with more than one broker that you're seeing pop up in multiple places in terms of where you're spending time, how then you're spending time talking to some of our clients about opportunities? What's a good example of one of the more common themes of the moment?
Tremendous flows in June. June was a really busy month. There was a couple of market events like the Triple Witch OPEX, the SpaceX IPO, the index rebounds. There was a lot of things that kept people busy, and obviously main index equities were performing tremendously through mid to late June. As you record this, equities are bouncing a bit today, but S&P's only up about 8% on the year now. Back in June, a lot of the AI companies were near 52-week highs, like a company like Micron, for example, and some of the memory stocks. There was just a lot of volume, and I think it was an instance really where fitting balances into certain trade structures, and we're not talking about the most complex things, could just be, do you have capacity to take on 2 times more non-cash balances from me for 4 weeks? Something as simple as
Yeah.
that. I think the street in general, with reporting dates and things like that on the horizon, there was a lot. People were thoughtful with where they allocated balance, and that kept us really busy. It was a really good opportunity through June.
We saw a lot of growth in balances across non-cash as well as cash. Have you seen much of a dip backwards since, or are you seeing a lot of those high balances maintained?
Yep, I would just call it a normalization. So
Okay.
a lot of those stocks are down too. It's a big part of it. But if you look at vendor data, balances are still higher on a 3, 6 month time frame. But vendor data suggests that balances are down a bit since the books closed about a month ago on Q2.
Okay.
Pretty regular behavior though to have a summer swoon in balances.
Right.
I don't think it's anything to be concerned about. One thing
No.
we're not hearing
It's a
about,
swoon. It's a swoon.
a summer swoon. It's a
Oh,
phrase. People use it. I didn't steal it from
it's
anybody.
is that because you wanted to match Mike on his
I'm
alliteration?
Yeah,
I'm trying.
I can't say hawkish hold, but he can say summer swoon.
I know.
I said it
Get him,
cheeky.
Brooksy.
Yeah.
It was the point to it. One thing we're hearing less about, Brooke, was many of the banks, the primes, in their balance sheet management efforts were asking us and our clients to fund some of the big large cap, mega caps in Korea and Taiwan, Hynix, Samsung, and those names have dropped kind of 40, 50% from their highs pretty dramatically. We wake up many times and the Kospi's down 10%. And so I think that's freed them up a little bit on balance sheet, and we're getting asked less and less. I haven't talked to any clients about it, but in terms of direct requests for either non-cash or funding provided for swap, we're seeing less of it today, which makes sense.
Okay.
But,
Good.
those
Okay.
names, though, coincidentally, Kospi's still up 35%. Taiwan is up 38% for the year, despite being down 40, 50% in the last weeks.
Yeah. Crazy.
Pretty incredible. Yeah.
These things are cyclical. It's widely reported there was some forced selling in the market, both domestic and overseas. This is kind of how things go. To Jim's point, summer swoon in effect. I think we'll see things come back in a big way post Labor Day.
And those names are such a big part of the index. It's almost
Yep.
unfair for me to quote the index like it's really broad, like it's the S&P 500 or the Russell 1000. It's not. It's kind of 40% of it is those two names in Korea, for instance. So I made that number up, which I generally
Yeah.
do, and nobody's going to look it up, I don't think. So I could have gotten away with it, but I called myself out.
All right.
But
Good. Way to be accountable. Good
Thank
job,
you.
Jim.
Making
All
progress.
right. Well, my closer icebreaker question for the day. You
Well,
ready for it?
hold on. I wasn't done with
Oh.
my questions yet, Brooke. I would like to hear from you. What
Oh.
are you speaking with our clients about? What is something that comes up with one or more clients on a regular
Yep.
basis? Anything out of the norm, kind of RWA mitigants and everything we're working on the trading side
Mm-hmm.
flows through to the clients. But anything different, say in the last
Uh,
month?
yeah, I mean, I don't know about different. With a lot of large pensions we work with, there's a continued shift. And I think that this is an evolution amongst large asset owners to think about how they can look at this product with a different lens. And
Hmm.
so a lot of them now recognize that they have a balance sheet, want to think about optimization of that balance sheet, want to look across their business more in a holistic way, and how do they optimize how they're using their assets, how they're generating funding from their assets, what's the most cost efficient way to do that, how they can then deploy that cash raised for the benefit of various functions within their overall plan. I just think that there's more of a broad mindset, and because of that, it involves a different higher level view of the lending and repo functions. And I think that gives it a different mindset, sometimes a different risk appetite. The why starts to change and evolve. And when the
Hmm.
why changes and evolves, then it allows people to think differently about how to prioritize projects and work. There's more of a desire to best position themselves back to the market to be able to take advantage of different trade opportunities, the things that you were talking about. There's a lot of work that comes on the back of it to make sure how are you optimizing your program. It's not only collateral optimization anymore and collateral flexibility. For sometimes it's trade structures, it's paired trades, it's looking at doing a lot of different types of transactions in different ways. And
Yeah.
so that continues to be a big theme, but not all lender types can do everything, because some lender types have very specific regulation that they need to follow. And so they might be having a similar type of mindset, but yet in a more contained way and within the ability of what they can do from a regulatory perspective. How can they do more with their program? I think that continues to be a big push. We also see lenders globally coming together, networking with one another more and more. And I think the more that they do that, the more that they learn from one another and share those experiences, and it accelerates the evolution further across
Yeah.
investor types. So I think there's a lot going on with clients these days. It's exciting.
We're
Sort
not
of
stock.
a,
We're not
yeah.
just stock loan anymore. Securities financing,
Yeah, you might be stock loan.
but
Yeah.
forever. I have a pinky ring locked in.
Yes, locked and loaded.
All right, what do you got us?
I would like to know if you could learn a new skill in life. It can be pertaining to your professional world, but it can also be in your personal world. What would that be? Maybe why, but what would it be?
I would like
I,
to learn to play an instrument,
Oh,
specifically guitar. I've
okay.
tried and I just can't do it. I don't know if I'm a lefty or a righty. It's miserable. And I have a lot of friends who play guitar as a way to relax and enjoy themselves. And I would love to be able to do it even just a little. And I can't get there.
Are you
Tough
musical at
skill.
all? Do you have a
Played
musical
this,
ear?
played the saxophone until the 10th grade,
Oh,
second
but
chair.
are you musical at all? Do you have a
Uh,
musical ear? Like that didn't
I,
answer the question.
I think the fact that I can't pick it up at all is evidence that I am not.
Okay. Do you have in other applications of your left hand, right hand, as much confusion?
I play golf righty and I played baseball lefty. I write left-handed, but I play hockey right-handed.
Okay.
To tennis, I switch the racket between my hands because I can't.
Okay.
I
What
can
about your
be.
feet? Are you
What would
righty? Are you goofy?
I'm goofy.
If you were to get on a skateboard, you're goofy?
I'm goofy. Yep. Or a
Okay.
snowboard. Yeah. So
Yeah.
I don't know what all that means. It's just tough. It's
Yeah.
really tough
Yeah.
being me. How about the fellas?
Yeah.
I'll
Mike.
jump. I think instrument's a good one. I thought about that one in the past as a cool skill, but mine would be speak another language, Spanish or Mandarin, something that's a highly populated language. I think would always be cool. And I think the more you travel and whatnot, and you start seeing how both locals and tourists who do speak other language kind of communicate,
Yeah.
I'm envious of that.
Oui,
Yeah.
senor.
I see what you did there.
All
Good
right.
man.
McNeil, do you have an idea?
Time management, late for my next meeting. So we can wrap this one up.
That's his way of saying we gotta go.
All
How about
right.
you, Brooke? Even
But no,
about it.
no, time management. He's right.
Yeah.
Yeah. All right.
All right.
Thank
Bye,
you,
all.
listeners.
Thanks,
See you,
listeners.
buddy.
Thanks,
See you
guys.
Thanks for listening. And now for our disclaimer.
This material is for your private information and does not constitute legal, tax, or investment advice. There is no representation or warranty as to the current accuracy of, nor liability for, decisions based on such information.